valid question that investors are asking themselves at the moment is where else are they going to be putting their money other than property? And if you look at other alternative asset classes such as bonds, where yields are at historic lows, the stock markets, where the recent QE-inspired rally has question marks, I think, over its sustainability. Commodity prices are obviously falling. Hedge funds are finding it difficult to anticipate central bank policy. It's leading many investors to come to the conclusion that property remains an attractive asset classes, in particular from a global perspective. Some of the stronger, larger global economies, India, Indonesia, they're cutting rates.
In agency right now, you have to get back to basics. We've told all our teams that in order to sort of counterbalance what's going out on the market, you've just got to do everything 150% well.
There's a lot of uncertainty, unfortunately, with the Brexit vote, so people are not very decisive either on a purchase or on sale. It's been due to a lot of different issues. I think a lot of uncertainty about prices, unfortunately, and what Brexit could bring.
Well, certainly there is the shift towards the rental market, and this is also the reason why many PRS developers from the United States, for example, come to London, because there's a market here for that. That's sort of at the beginning of a fairly big development.
One just cannot forget that this challenging market means that buyers are looking for well-informed, professional property advisors. So I think if ever there was a time not to be an estate agent, but a proper property professional, it's right now.
The first thing, I suppose, to set the scene that really explains, I think, why we are where we are and where we're likely to go next is just to look back very briefly over the last 4 or 5 years, which was a time when the prime central London market sort of pulled away from what was happening across London. After the financial crisis, all the safe haven money obviously came in, and then London eventually also pulled away from what was happening in the rest of the country. So we saw a split in terms of high value, lower value. We also saw a split develop across the geography of prime central London. And if we run through over a period of time from where we were a couple of years ago to bring us up to where we are today, and our map that we have of PCL and what's growing and what's growing less, you have a fairly clear east-west split. Everything to the west of Mayfair seems to be in negative territory from an annual growth perspective, whereas further west things seem to be slightly more positive, lower value property, higher concentration of new build schemes coming through that's supporting demand, and also a sort of gravitational move east as well as people are looking for more affordability. I think newspaper headlines and the media is informing what's going on. It's driving sentiment, and actually, but if you look back over the years, you will find a series of newspaper headlines that point to an impending crash that never actually came to be. And what's happened since the Brexit vote, journalists, property journalists, and I talk as a former property journalist myself, have simply appended Brexit onto what's been happening, this wider narrative around house price, around the sort of impending house price crash. So it's not to ignore what's going on in the press, but look at it in some context, get some perspective on, or I think from an investor's perspective, on what's going on.
I think that basically what's happening in the London property market at the moment is that transactions are so flat that it's almost a waiting game of who's going to buckle first in prime central London. So the buyers believe it's a buyer's market, but a lot of the sellers are, if I don't get my price, I'm just going to hold on and rent my property. So there's an oversupply of property on the rental market. But interestingly, in new developments where they really need to have the transactions, I think there's a lot more transparency. And these developers in their sales offices are being a lot more open about the fact that they want to do deals, about when a deal happened and how little they have under offer or how little transactions there are. So if you are looking to buy in the rental property market at the moment, in the more traditional buildings, it's a matter of going out there, doing the viewings, having the conversations and finding out where you find the flexibility.